The co-founder of the company that builds the servers America's most advanced AI chips run inside was arrested in March for smuggling $2.5 billion worth of them to China. His method involved a warehouse full of fake servers, falsified shipping documents, and hairdryers used to peel genuine tracking labels off boxes so compliance auditors couldn't trace where they were actually going. That last part isn't a metaphor. That's how it worked. And before investigators caught the scheme, $510 million worth of restricted AI hardware had already arrived in China. The front company, set up to move the chips, had quietly become one of the largest buyers in the entire Supermicro supply chain, one of the top 15 globally, and nobody in the compliance department noticed for 2 years. I'm James Whitmore, and what I want to do today is go past the crime story, because the crime story, as remarkable as it is actually the least interesting part of what this case reveals. So let's start with who Supermicro is, because a lot of people don't know the name but are living inside the infrastructure it built. Supermicro, formerly Supermicro Computer, is one of the world's largest manufacturers of AI servers. Not chips, not software. The physical boxes that the chips go inside. When a tech company buys Nvidia GPUs to run AI models, training them, running inference, building the next generation of large language models, those GPUs almost always go inside a Supermicro server. The company builds a substantial share of the physical hardware backbone of the AI revolution. Its revenue hit $40 billion in fiscal 2026. It's not a footnote, it's core infrastructure. The man arrested was Yi Xian, Wally Liaw, 71, who co-founded Supermicro in 1993. Not a junior employee, not a rogue sales rep. The co-founder, still serving as Senior Vice President of Business Development and sitting on the company's board of directors. According to the DOJ indictment unsealed in Manhattan Federal Court, Liaw worked with Supermicro's Taiwan sales manager and a third-party broker to route billions in restricted AI servers to Chinese buyers through a front company in Southeast Asia. The front company bought the servers from Supermicro. Then it repackaged them, removed all identifying information, and shipped them to final destinations in China. The scheme worked, according to prosecutors, partly because of the hairdryers. Compliance auditors checking the boxes would see unmarked crates with no obvious connection to Supermicro. The original labels, the ones that would have triggered red flags, had been peeled off. Warm air from hairdryers loosened the adhesive. Simple, low-tech, effective. When the DOJ indictment came down, Liaw was arrested. His co-defendant, the Taiwan sales manager Stephen Chang, immediately boarded a flight to Asia. He remains a fugitive. Supermicro's stock, which had already fallen from a peak of $122 to around $24 in the months before the arrest, partly because of a separate accounting scandal that nearly got the company delisted from Nasdaq, partially recovered but stayed well below its earlier highs. The company was not charged, only individuals, but it's cooperating with investigators and conducting its own internal review. Here's the thing though, you can prosecute Wally Liaw. You can catch Stephen Chang eventually. You can find every front company operating in every port in Southeast Asia. None of that actually solves the underlying problem. And the underlying problem is the one I want to spend some time on. The US export control regime for advanced AI chips exists for a specific strategic reason. The chips at the center of this case, Nvidia's H100 and H200 GPUs, are currently the most powerful commercially available hardware for training and running large-scale AI models. Washington's assessment is that if China gets these chips at scale, it closes the gap with American AI capabilities in ways that have significant military and economic implications. So the Commerce Department restricts their export. Companies need specific licenses to sell them to China. And in practice, those licenses aren't being granted. That logic is sound. The policy intention is coherent. The enforcement problem is that the market being regulated is operating at a scale that makes the incentives to violate the restrictions enormous. Chinese tech firms had placed orders for more than 2 million Nvidia H200 units for 2026 delivery before the export controls blocked those transactions. 2 million units. At current market prices, that's a purchase order worth something in the range of tens of billions of dollars. That demand didn't go away when the export restrictions were tightened. It redirected, and redirected demand of that magnitude creates a financial gravity that is genuinely difficult for any enforcement regime to counteract. The Supermicro scheme operated with a front company that grew so fast it became one of the 15 largest buyers in Supermicro's global supply chain. Think about that for a second. A company that existed specifically to launder AI hardware into China became a top 15 customer of a $40 billion company without triggering compliance review. The scheme had a built-in camouflage. The bigger it got, the more legitimate it looked. And this case isn't isolated. Alongside the Supermicro indictment, there are separate prosecutions for smuggling Nvidia A100 GPUs, a slightly older model, also restricted, through different channels. Investigators disrupted attempts to route HP enterprise supercomputers with H100 GPUs through yet other routes. The Bureau of Industry and Security is running parallel investigations into Southeast Asian transshipment networks that are expected to produce additional enforcement actions in the second half of 2026. Each of these is a different scheme. Different people, different routes, different front companies, all converging on the same destination. If this kind of analysis is useful to you, understanding how major geopolitical stories actually work under the surface, subscribing to the channel costs nothing and means you'll get it every week. Now, the enforcement challenge this creates is structural, and it's worth being precise about why. American export controls were designed with a specific assumption about how supply chains work, that advanced technology moves from US manufacturer to end customer through a relatively traceable path. If you control the exits, require licenses, monitor the major distributors, audit the compliance programs of the companies closest to the technology, you can meaningfully restrict where the technology goes. What the Supermicro case illustrates is that the assumption doesn't hold when the demand on the other side is large enough and the manufacturing is globally distributed enough. Supermicro itself is based in San Jose, California, but its manufacturing is spread across Taiwan, the Netherlands, Malaysia, and other locations. Its supply chain, the components that go into the servers, the assembly, the logistics, touches dozens of countries before a box ever ships to a customer. The path from Nvidia GPU manufactured in Taiwan using TSMC's process to server delivered to a data center in Shenzhen has many nodes. Each node is a potential point for diversion. Southeast Asia has become the geography where this diversion primarily happens. Singapore, Malaysia, Vietnam, countries with legitimate high-volume trade relationships with both the US and China, sophisticated logistics infrastructure, and corporate environments where shell companies can be established relatively easily. The US is now pressuring these governments to tighten their own export controls. Some are complying slowly. The gap between those two is where the hardware moves. There's also a deeper tension embedded in the enforcement approach that the Supermicro case makes visible. The companies tasked with complying with export controls, the Supermicros of the world, are also the companies with the strongest financial incentive not to comply. China is the largest potential market for AI infrastructure on Earth. Before export controls, Supermicro was competing aggressively for Chinese data center contracts. Those contracts disappeared overnight when the restrictions tightened. From the perspective of a company watching billions in revenue vanish, the temptation to find workarounds is not abstract. It's existential. That's not a justification for what happened. Liaw is charged with federal crimes. But it is an explanation for why compliance failures in this industry tend to happen at the top rather than at the bottom. Junior employees following procedures don't lose major customers. Senior executives who built their companies on those relationships have both the motive and the access to route around restrictions when they decide the risk is acceptable. The US chip war strategy rests on a theory that denying China access to the most advanced AI hardware slows its AI development enough to maintain a meaningful technological gap. Whether that theory is correct is a genuinely contested empirical question. Some analysts think it's working, others think China's domestic chip development is moving fast enough that the embargo's effect is limited. But the Supermicro case adds a different dimension to that question. Even if the theory is correct, the enforcement mechanism has significant structural vulnerabilities. $500 million in hardware got through. The smuggling network had scaled to become one of the largest customer relationships in the target company's portfolio. And this was a case that was caught, which means it's the cases that weren't caught or haven't been caught yet that matter most for assessing whether the policy is actually working. At the Trump-Xi summit in Beijing in May, one of the notable outcomes was that Nvidia's CEO flew to China hoping to restore chip sales and came home without a deal. China declined to order the H200s even after export restrictions were eased for that model. We analyzed at the time what that decision meant about China's semiconductor self-sufficiency strategy. What the Supermicro case adds to that picture is a parallel track. While the official, legal channel for chip sales was closed and China was publicly declining to engage with the reopened version, a separate illegal track had been moving $2.5 billion in hardware through hairdryer-equipped warehouses in Southeast Asia. The chip war is being fought on multiple levels simultaneously. The visible level, export controls, diplomatic negotiations, Nvidia summit meetings, is the one that gets covered. The less visible level, front companies, transshipment hubs, compliance failures at the most senior corporate levels, is the one that may actually be determining outcomes. And if the co-founder of the company building the hardware is running the smuggling ring, the enforcement architecture has a problem that adding more licenses and more audits won't fully fix. The trial is ongoing. The fugitive is still at large. The investigation into Southeast Asian transshipment networks is expected to produce more arrests before the end of 2026. I'll be covering this as it develops. Subscribe so you're there when it does, because the next chapter of this story will matter. This is James Whitmore.